Welcome back to Fresh Economic Thinking. I'm Cameron Murray. Today, a special guest, Tarric Brooker. Tarric, welcome to the show. Who are you? Can you introduce yourself to our audience? Because I've followed your stuff for a while and I find it very interesting.
Okay, well, right. Sort of my hat at the moment is that I'm a journalist, mostly working for News Corp, but I also work as basically an independent economic analyst. I look at various different things that I find interesting or that my readers would find interesting, and I just delve into that, whether it's immigration, housing, China, all manner of different things. And basically, I got into this originally because I was just interested in knowledge for knowledge's sake and just sharing that with people. And, I just picked up a book about over a decade ago and I just decided, okay, I don't know about these things, so I'm going to learn. And I keep learning and learning and learning. And I'm very lucky that my job gives me the scope to basically spend my days just gathering more and more knowledge, putting all the different pieces of the puzzle together, and then sharing that with my readers.
And is have you got an economic background or are you more of a generalist?
I'm more of a generalist, and I just sort of, pick up all the different pieces and put them together. And I think that that's something that's somewhat lacking at times in the world of economics, because it's very easy to sort of be like, I'm an economist, I'm this, I'm
Mm,
that. But then when you put it all together, I find that that sort of broader perspective at times is somewhat lacking. And I feel like, say like someone like yourself, you're very much a sort of jack of all trades across all these different things that you cover as
mm,
part of your website. But I feel like a lot of other people are just like very much pigeonholed into, oh, I'm a labor economist
yeah.
or I'm a macro economist or whatever. And then, there's not necessarily a lot of the time the understanding there of the broader, bigger picture issues that really drive some of those things.
Well, that's great. Let's talk about some of those bigger picture issues because your website is at burnouteconomics.com. What is burnout economics? Because that's where one of those things I think you've sort of tried to tell a big picture story with this phrase that you've coined. So what is that? Because I think it's pretty relevant to not just Australia, but Canada, New Zealand, a lot of the contemporary patterns in sort of macroeconomics. Let's talk through that.
Yeah, a couple of years ago, I think it was maybe towards the end of 2021, start of 2022, I sort of got this inkling as I saw central banks starting to raise interest rates that there would be a fair sizable amount of pushback on that from fiscal policymakers, from the politicians, because you're talking about the end, not only a tightening of monetary policy, but the sort of lagged impact of all that stimulus during COVID coming to an end. And that was going to create some fairly challenging economic times for
Mhm.
countries across the world, particularly those like Australia, Canada, the US, which deployed these enormous stimuluses during COVID. So I basically come up with the idea that you were going to see the RBA and the other central banks with their foot squarely on the brake, trying to, reduce aggregate demand, bring down inflation, but then the government wouldn't be willing to take their foot off the accelerator.
Right. So that's the
And
burnout part. You've got um, the government with its foot on the accelerator and the central bank with its foot on the brake.
yeah, exactly. So, what you basically get is like a burnout in real life, a whole lot of smoke, a whole lot of noise, and not a whole lot of forward momentum. And that's something that we've generally seen, here in Australia, in Canada, and in New Zealand in particular, because, and not only that, but we've also pursued it in ways other than the normal fiscal sense as well, in terms of just like putting the hammer down on the fiscal side of spending. We've also seen that additional aggregate demand deployed in the form of migration.
Mm. Yeah, it's interesting when you put it that way because I've been drafting an article, a fresh economic thinking article, about the lost decade, and this will resonate with you. Obviously, Canada, New Zealand. At the moment, Canada's GDP, real per capita terms, in September 2024, is the same as it was at the end of 2014. So the
Yeah.
question is, what's been going on there? Lots happened in Canada, right? There's been that huge migration spike since COVID. but also it seems like it's been this, yeah, this burnout situation of trying to tighten up after the property boom, but then trying to spend a lot of money as well, like public sector spending, which may or may not help grow the macroeconomic pie, and it might have its own benefits. Yeah. So what do we? You know, you've coined the term. You've noticed it makes sense to me. What should we do? Like, what are some options to try and get the foot off the brake, or get the economy moving without, another inflation spike, for example? Because I know that is another concern of yours, right?
Indeed, I mean, I think that that is something that could potentially happen because we've got a situation now where politicians increasingly don't want challenging economic times on their watch. We
Okay.
see that with, you look at say like the Albanese government, they're like, well, we want to bring down inflation, so well, we're just going to bring down inflation ourselves. We're just going to spend billions of dollars on electricity subsidies, on increasing rent assistance. We're going to bring down inflation all on our own. I mean, it's not real, but or you look at even in the US, it's like, well, Trump is going to increase the deficit by 7 points. Oh, sorry. Trump is going to increase the deficit by 7.6, while Kamal is only going to increase the deficit by 3.5. And you're just like, and that's supposed to be good? That's supposed to be good? Like, are we meant to be impressed by only increasing the deficit by 3.5 billion dollars? Sorry, trillion. Trillion with a T.
Trillion.
Yes,
It's
trillion
a
with a
very big
T.
economy, that American economy, that's for sure. Wow.
Yeah,
And
so I feel like you've got that sort of um that very much changed atmosphere where politicians just want to keep the hammer down again and again and again because they don't want to let go, and I mean I guess and a good example of that is in Queensland where you are with
mhm.
the Miles government just throwing everything at the wall and seeing what sticks.
Yeah, look, I just briefly on that, he's definitely bought my vote. So, like, I'm not going to pay electricity for another year and a half between the state and federal subsidies. I can catch the train to the Gold Coast for 50 cents each way. Um, it's definitely working. But like, I guess the question then is, well, why is that bad? Like, the economy's been stagnating, at least in per capita terms. Don't we need some sort of investment? If the private sector's not investing enough, don't we want, for example, in Queensland, the state government to build lots of hospitals and upgrade all the commuter rail stations and do whatever else they're spending on? I don't know everything they're spending on, but you know, we want the car to move. We don't want it to go backwards.
Oh, yeah, no, absolutely. But I think that's part of the problem with burnout economics in the sense that, like, if you look at some of the various policies, they're not the things that you would expect to see. They're not the sort of productivity increasing infrastructure projects for the most part if you look across the breadth of the various spending. Now, that
Yep.
obviously, I'm not intimately familiar with what the infrastructure situation looks like in Queensland. That's
Yeah.
not really my wheelhouse. But even if you look at, say, the US, or you look at the broader federal spending here in Australia, you look, say, for example, at government-funded job creation, non-market jobs.
Mm.
In sectors that are they might be the private sector, might be directly public, but we're creating all these jobs. So you just go, well, that's good, isn't it? Isn't more people in employment good? But it's like, how are we funding this long term? How,
Yeah.
what are we going to do to make that possible? And that's something that we've seen increasingly in the US as well, with the latest job numbers, where we saw this big surge, largest surge ever for a September in um, hiring for the public sector. So I think the thing is that we need a strategy whereby we pursue, the virtuous circle, as I like to call it, of, increasing productivity, increasing investment, increasing productivity, and that sort of positive feedback loop of that benefiting households. And I think that that requires just top to bottom reform in so many different ways, because even in the past, when things were working better, we weren't seeing those benefits flow through to households. And because it wasn't flowing through to households as much, you didn't get that circle of increased consumer spending, of I mean, if you like, I did an analysis a few months ago on Australian consumer spending broken down by age demographic over time. And if you exclude housing from the pie, in real terms, households are spending less on consumer consumption today than they were back in 2003, 2004, which is, sorry, households under the age of 45.
Okay.
So, but whereas then the boomers who, and the sort of older demographics who benefit from rising asset prices from these large inheritances and all these other tailwinds, they are spending more. But to be completely fair to them, the level of growth that's been seen in their spending is not really unprecedented. It's just
Hmm.
what would be sort of normal-ish had the economy continued to grow at the rate it was growing prior to the GFC.
Wow. So you're sort of saying that in this burnout economy, where there's not a lot of per capita growth, what we're actually seeing is not everybody sort of stagnating. The older half of the population are actually getting the normal rate of per capita growth. And the younger half, in terms of their ability to consume goods and services, and the younger half are actually seeing declines in their ability to spend. So your typical household headed by someone aged 30, maybe they got some young kids. That typical person today in 2024 is essentially no better off than in 2004. Is that what you're saying? Or worse off, even slightly, in
Well,
their
that
ability to consume goods and
yeah,
services?
essentially, I mean, and that also really depends on because the current data that we have only covers till 2022 from the ABS. But if you
Mm,
look at the data from CBA on their spending broken down by age demographic, now naturally these aren't two entirely perfect things to combine. So it's very much sort of like a, chuck the dart at the dartboard sort of estimate in relative terms. But we're actually looking at, people in that sort of 30-ish age demographic being down as much as 10% in terms of their
mm.
real consumption outside of housing. And I mean, I guess that's sort of not really too surprising considering the fact that in this day and age, we're seeing more and more people at that age renting. They're not seeing that benefit of that increased consumer spending as they sort of purchase a home perhaps a bit earlier. And then
Mm.
those mortgage payments as a percentage of their income start to come down a little bit, and you start to see that benefit. Whereas, I mean, I think that's perhaps one of the reasons why we're seeing this issue because home ownership is being postponed, and you're not seeing that benefit to the consumer economy that we perhaps saw in previous generations.
Yeah, that makes a lot of sense. I guess I wonder how much of that has happened since COVID, because remember, during COVID, there was a massive first home buying spike, right? But what's sort of it's a little bit different this time. So the last first home buying spike was after the financial crisis when there was a lot of stimulus, right? First home buyer grants and things. And in the decade after that, interest rates came down, right? There was a quick decline. It went back up. First home buyers get in, and then they benefited over that decade of buying in there, getting lower interest rates and rising incomes to some degree. Since COVID, it seems to be that we haven't got the rising incomes much, but we got the rising interest rates, a very extreme version of that. And so, yeah, had you bought in 2021 in Brisbane, yeah, maybe your house is worth a little bit more, but you're paying a lot more to stay in it. And so, what you can consume with your leftover income after you pay that increase, despite your income going up, has probably fallen. Is a lot of the effect coming after COVID? I guess is my question. Is my big picture sense from the data I know is that consistent with what you've dug into comparing sort of the 2010s with the post-COVID era?
Yeah, I think the thing is that it's just worth noting that the decline for younger people was present prior to the pandemic. It was
Uh-huh.
actually the older people who that stagnation in terms of real wages and all that sort of stuff that was already that sort of what would you call it? That sort of very, very weak growth was already very much present for younger people before the pandemic arrived. Like I put together a while ago a chart from based on the data from the Productivity Commission on wages for people by age demographic. And I think it was from the the mid 2000s onwards. And basically, real wage growth for those groups in aggregate wasn't quite non-existent, but it was near as makes no difference non-existent on an annual basis.
Mhm.
So that was very much present, but it has worsened during COVID. And just interesting side note, the actual spending of older demographics, what we've been seeing in terms of the increase since the CBA started releasing their data, which covers from, I believe, either the first or second quarter of 2022 onwards, that is actually just them recouping what they lost during the pandemic.
I see. So these households had declining spending and income during the pandemic, and now the older ones
Correct.
have recovered, but the younger ones haven't really.
Exactly. The
Uh-huh.
the older ones have bounced back. I'm fairly certain that outside of the sort of 70 and 75 onwards, those ones are streaking ahead. But in terms of like the sort of more just the sort of more normal, just about retired demo, they they are still recovering to where they were back in 2022. But for young people, if you look at what's happened since 2022 onwards, they've just fallen quite hard, especially the 25 to 34 demographic who are getting hit by higher interest rates and are getting hit by those higher rents. Whereas I imagine the younger people, a lot of them are moving home or moving into share houses, which is sort of somewhat
Yeah,
distorting the picture at that level.
I see what you mean. That does remind me of one of my bugbears, which is superannuation. Like these 25 to 35-year-olds are having everyone's kids, they're having all the kids and they're having people's grandkids. And you're telling me now that their incomes have stagnated or declined. And at the same time, they're meant to pay a little bit extra now, 11% just about of that income, and put it into some future period when they're going to be richer and not have little kids to look after. I mean, yeah, I think that re-emphasizes a point I often make is that, the financial struggles are real when you're young and raising a family. They're not very real when you're old. And Ben Phillips talks about this a lot. Surveys of financial stress find that retirees are happy as it's young renting families and low income ones and those with disabilities and those who struggle to stay in the workforce. They're the troubled ones. So this seems to be a global trend, right? Is this also the case in New Zealand or Canada or other peer nations? What have you looked at globally that is comparable? Is there any place that's getting a very different outcome that we might want to sort of learn from? Because I do hear the US is growing rather quickly post COVID. Is that right?
That is correct. And I think the thing is if you look at productivity like Australia saw this big jump in productivity, and this is also present to a degree in New Zealand and also in Canada, but it's particularly in Australia, we saw this big jump in productivity, and that is largely a function of lower wage, lower skilled workers either not working as much within the domestic labor market
Mm-hmm.
because of lockdown, because, not being able to go to work, etc. Also, we had that big surge in unemployment, which was temporary, and well, that benefits productivity when it's people who are below the average, not working as much. And over time, as we've seen migration resume, we've seen productivity in Australia fall and continue to fall, unfortunately. So we haven't had that tailwind underpinning wage growth the way that, say, the US has, where wage growth is still relatively strong, considering that their economy is slowing down somewhat now. But their productivity growth has been they also saw that surge in productivity, but they have managed to maintain that. While there was, some give back as things resumed, as unemployment fell, as the world went back to normal, but productivity has still continued to grow. Now, that I
Yeah.
imagine is something that we could probably get into over an entire
Yeah.
show. But I
Why?
think that
Why?
that's
What are your thoughts? Yeah.
well, I think the thing is
Yes.
that you've seen this really strong level of business investment in the US. You look at things, say, like investment in manufacturing. Manufacturing investment in the US has risen something like three or fourfold compared with what it was prior to the pandemic. And because the settings of the economy have been changed by government policy. And also the fact that geopolitical settings have changed, whereby, you don't know who's going to slap a tariff on who next. It's a lot more, there's a lot more incentive to suddenly, build microchips in Arizona than there
Mm.
was before. Whereas perhaps Australia doesn't have those same drives, those same industries that we could benefit from, from this, even say, for example, the rise of AI, you're seeing this sort of genesis of a new industry, of this technology being deployed in some cases towards higher productivity. And even if it's just the investment that results in pursuing that higher productivity can be beneficial. Whereas
Mm.
here in Australia, it's like, well, we're going to just jam more money into the housing market, or we're going
Yeah.
to, you know, grow more publicly funded jobs, or whatever that may be.
So it sounds like your take on the differential economic performance of the US versus Canada, Australia, New Zealand since COVID is much more about the composition of spending and investment. And that in the US, um, the investment is in industries where economies of scale really make sense, whether it's AI and software or manufacturing, or if it's Elon Musk's Starlink, or whether it's microchip factories because of the Chips Act and other subsidies, or potentially even military spending and requiring onshore manufacture. This um, this whatever policy settings that shift spending and investment to those sectors where there are large economies of scale, so you can get more value per person, results in longer term growth and accumulation. That very non burnouty process that you've been trying to describe of making good big capital investments that make returns rather than doing more of the same, build more of the same houses with the same technology in slightly more difficult to get to places, or build more mines with the same technology in slightly more difficult to get to places. Is that an accurate summary of your view, or have I missed something important, do you
No,
think?
I'd say broadly speaking, that's accurate. I think that we've just got a set of circumstances here in Australia where we sort of just have that old definition of insanity, of doing the
Mm.
same thing over and over and over again, variations on a theme, and just pursuing that same thing just again and again, regardless of who's in government. It's just, one side will do this, the other side will do that. But at the end of the day, it's like, well, congratulations, you've just stimulated the demand side for housing again. And are we expecting something different this time? Well, you say we are, but I think we all know that it won't be. So I think that's really sort of the problem here in Australia, is that we're not very imaginative, and we've got this sort of settings whereby there's not really a whole lot of incentive to pursue your capital into a productive enterprise.
Mm.
Because people just look at it and they go, well, I could invest in building a business. I could deal with the red tape, the compliance issues, the complexities of the tax system and everything else. Or I could just buy a negatively geared investment property and just watch it double in 7 years.
Although I've just heard a lot of apartments from the 2010s have definitely not doubled and even declined in nominal terms in a lot of places. So it matters where you and what you buy in property,
Oh,
that's for sure.
absolutely. But
Mm.
that's we're getting into almost treasonous talk here with that.
So, well, do you know Punter's Politics? Have you ever seen this guy? I want to quote to you something. Have you heard
Yeah.
of him? Yeah.
Sorry,
He,
I just missed that. I think there was a bit of an
oh
connection
yeah.
issue.
So there's a Punter's Politics is an interesting
Yep.
Aussie commentator, and he messaged me. How is Australian quality of life still so good? Like, how can our economy even function when we seem to be doing these burnouts and not really investing in anything new or different? And I said that this is the complete puzzle. Let me quote. You know, uh, is getting our 1% of royalties off mining enough to create a middle class wealthy country? Why? How can we still be, a first world country? And I said, well, the puzzle is that New Zealand doesn't even have the resources, and it still seems like a modern first world country doing similar things. What is it that we're doing right, do you think? Do you have any insight? Because I travel a lot and I come back and I go, we're a rich country with lots of good stuff. Our cities are booming. What are we doing right? We're digging out a lot of dirt. And now we've got a lot of gas and we're getting a little bit of royalties, like, and in Queensland more than elsewhere, that we're turning back into some public investments, but also just, subsidizing people's electricity. What what are we doing right? This is, I guess, that the lucky country thing. Who knows?
Yeah, yeah, it is a bit like that. I think the thing is like we're sort of almost got that like inheritors of the earth thing going on, that we sort of inherited this country with sort of in, let's call it from say like the 70s onwards. We inherited this country with overbuilt infrastructure, with the ability to grow our population, to grow our economy, to do all these different things in a very productive way. You look
Hmm.
at say like the Sydney Harbour Bridge, for what it was built for back in the 30s, massively overbuilt. Massively overbuilt.
Mm.
At the time there was people going, well, we're never going to need all this, but some bright spark said, yes, we will. Same thing with say like the water infrastructure. A lot of that
Mm.
was built back in the 50s, 60s, 70s, and here we are with the population, sort of two and a half times that, and it's just sort of still, going humming along relatively well.
Right. So you think,
So
but wouldn't we these days say that overbuilding is inefficient? Like if we
we
propose today to overbuild like crazy, we'd say that's wasteful. We should have built something smaller today and built something smaller again in 25 years or 30 years.
Well, that's the problem, isn't it? That's the very much the,
Okay.
the shift in thinking that's happened. Like we've got just in time supply chains. We've got infrastructure that's built for the needs of
Hmm.
its completion, its completion timeline, which a lot of the time it doesn't end up meeting anyway.
Yeah.
And it's all about just getting things done for the bottom dollar, rather than thinking that, hey, maybe we should build something a bit more expensive, a bit better, a bit bigger, and just not have to do it again. So like a good example of this I was reading about the other day. I'm a big fan of sort of old world industrial engineering, was the London sewer system. Someone said,
Yeah.
why are you wasting this money on making this thing, so large? Like you're not going to need that for 100 years. And the guy goes, well, we're going to need it eventually. So I'm just going to make it double the size. And if not for them doing that, they would have had to basically tear everything up and then just do it all over again. Back in, I
Mm.
think then the capacity would have run out sometime in the 60s or the 70s, but they got that right back then. And, I think it's just about finding worthwhile investment and just accepting that that has a cost.
Yeah. Look, that's difficult, right? That's a difficult, yeah. It's a classic question, right? A macroeconomic question. Um, Someone has to choose which capital investments to make. Now, whether that's the US, they try and change the incentive with their CHIPS Act and their subsidies because they know they want onshore microchip manufacturing. So someone has to make a political decision whether they incentivize, subsidize, regulate to direct the private sector or spend public money themselves on something. So we have to make those decisions collectively and be comfortable with it. Do you think we just are in a bit of a political stalemate where we just can't agree on starting that? Because maybe you and I could agree on a few tweaks that might be good to sort of nurture some manufacturing sectors or software or those economies of scale sectors. How do we get politically some agreement? And let me just give you an example. The Sydney Metro opened recently, and all I heard was great things. This was a huge capital program, publicly funded. Um, Everybody loves it. How do we get more than just these sort of glossy public facing investments? How do we get those boring manufacturing sheds built in a way that we can all agree is sensible? Do you have any political thoughts? I mean, you don't have to solve everything. I'd just be
Yeah.
any insights or thoughts to move the needle. I think are
I
worth
think that I
sharing.
think the thing is that it's very much a case of just shallow politicking in this country. We what we need is a leader to stand up, on either side of the major party divide and just say we need to focus. It's very much how they run things. Say, for example, in Singapore,
Mm,
for someone to just say, okay, well, we're going to do this for the benefit of the country, and we're going to sit down and we're going to agree on some various infrastructure projects or whatever it is that what we need to and what we need to accomplish, and we need to sit down as a political class, not just as individual parties, to figure out how we're going to do this and how we're going to do it the best way possible, the cheapest way possible, but to get that quality. Because I feel like part of the problem as well here in Australia is that our infrastructure just costs an ungodly amount of money. You look at some of these say these tunnels and stuff like that
mm,
elsewhere in the world, and you go, oh well, this is going to cost X number of dollars per kilometer. It's like, well, why does ours cost 5 times as much? So I
yeah.
think that there is that level of efficiency that can be found somewhere, that we need to sort of sit down and discuss and just go, okay, how can we say it's even the same thing with the construction sector. How can we get more houses to people more cheaply and more
Mm,
efficiently? Now, obviously, this is something that you've been talking about recently,
mm,
because there's a lot of people who don't want more houses getting out there more efficiently, more cheaply, and in larger numbers. But, I think that we can find, even if it's done, through a public builder, if we can find those efficiency gains, those cuts to red tape that's ineffective, I think that and compliance things that are ineffective, I think that there is a pathway forward for us. It's
yeah.
not easy, but I think it is possible.
Yeah. Look, I think you're right. Like, bit less politicking, more of a shared vision across parties, I think will sort of break down those issues. I'm thinking of, for example, Sydney's second airport. That's a big, expensive project that took a long time, right? Decades for to get that political agreement. It would be nice to shortcut some of that political debate from decades and be a bit more responsive to things that might work now. Yeah, look, it's a classic problem everywhere, right? The risk of an agreeing or dictator type political class is that they can also abuse that power and build lots of white elephants that suit them and their mates. So if there was an easy political answer, everyone would be using it. I don't think political answers are ever easy. Physically and technologically, sometimes maybe a lot easier. So why don't we wrap it up there today, Tarek? Look, I hope everyone's got an insight into burnout economics. Is there any final, very quick words? Where can people find you?
Okay, well, people can find me at, as you previously mentioned, burnouteconomics.com, and also at avid commentator on Twitter.
Terrific. Go and find Tarek there, people. Thanks for listening. Thanks for coming, Tarek.
No worries, mate.